Hi everybody, Alex the Pro here from Expert Forex, and welcome to the second video in the series, Lies About Forex Trading That People Like to Believe. In the first video, as shown on the screen, we featured the first 5 lies that people like to believe, and there was quite a bit of discussion around lying and that type of thing. So please watch this video if you haven't done so already, so that it follows into this video that I'm making right now. And as I say, there was quite a bit of discussion about what a lie is and what forms it can take. And please watch that video. I'm not going to repeat this. You can read through this particular slide, but I'm not going to discuss it as I've done that in the first video. Now, since making the first video, another type of lie has come out, and that lie is misguided attention. So it's actually using truth, but it is misguided and to a certain degree irrelevant. And on your screen you can see the example of the safari out there, and the ranger is pointing out, look very closely under that tree, you can see a line, and at the same time there's a line right next to them looking at what they are looking at. So he is telling the truth, but it might be irrelevant because there's a line right next to them. It's misguided attention. Now, how does this happen in Forex trading? Well, what happens is that people buy into the idea that optimized settings are the very, very best settings that you could possibly use when trading a Forex robot. And what they then do is they spend a fortune on really powerful computers and equipment and water-cooled processors and all kinds of things to get to the most accurate optimized settings. Now, that is total misguided truth, because it is true that they are going to get the very best optimized settings that you could possibly get, but it is irrelevant because optimized settings are really not what makes Forex robots profitable. And we're going to look at that. Settings are not the be-all and end-all. And firstly, optimized settings are like taking last week's jackpot numbers and thinking you're going to win the jackpot again. So be careful of irrelevant truths that might be told to you, or that you personally might believe for some reason or the other. You need to ask the question, why is that important? Why are optimized settings the best settings? And then you say, well, maybe they're not because of this and that type of thing. So be careful of this type of lie. So for more information on how optimization and finding settings out of optimization should happen, optimization is the first step. There's a whole lot of other steps that you have to follow for you to get really robust settings. There is a free course, and I'll just show you that course. It is an 8-video course. As you can see there, it has descriptions and videos. It is a free course. There's the link to that course. It will be in the description of the video, so you can go and have a look at that and get a better idea of how to get good settings for your EAs. Okay, so let's move on to the first reassuring a big lie in this particular video. The big lie that everybody likes believing, they might have been told that, or they are buying into that lie, is that if you have the right settings, you will always make lots of money when trading a Forex robot or a trading robot. The inconvenient truth is there are 9 things that have to align for you to really make money out of a trading robot. And settings is by far the least important, or I wouldn't say the least important, but has a very low importance in that hierarchy. You see, you will make profits if you are in the right environment for that particular EA. If it's a trending EA and using a trending currency and the market is trending, you will make money if you have reasonable settings. And reasonable settings are not always the optimized settings. They are the most risk balanced settings. So let's have a look at those 9 factors quickly. There's a lot more discussion in the video I'm going to refer you to, but firstly, the market phase, as I mentioned, is of vital importance. You have to trade the EA in the market phase that it's been designed to trade. So a trending EA should be traded in a trending market. It will not make profits, or it's unlikely to make profits in a sideways market. You have to use the right currency. You can't use a sideways currency. Even in a trending market, you have to use a volatile and strong trending currency or instrument like gold or silver, or one of those pound New Zealand type of currencies that really move when there's a trend. You have to use the appropriate lot sizing. Now, lot sizing is all about risk control. So you have to balance your risk control with your ability to earn. And that's quite a tricky one. It's always good to err on the more conservative side and focus on risk control rather than... But your lot sizing is so important. I've seen more Forex trading accounts lost where the traders used a highly profitable EA and use the inappropriate lot sizing, because you will get a margin call if you do that. You have to use the appropriate broker account, the type that allows and that doesn't have major restrictions, maximum open trade restrictions, maximum minimum lot sizing. Or the broker accounts can be very tricky, so you need to do a bit of homework on that. You have to use the appropriate robot. If the market's trending, use a trending robot. Don't be silly. So you have to use the appropriate robot in the market conditions. You have to use the right time frame, because if you use the right time frame, you can capitalize on that particular trend or the market phase that is happening. So shorter time frames in general provide higher returns, but also much higher risk. But higher time frames give you lower returns, but much more risk control. So you need to balance those ones out. Then settings comes along, and quite honestly, as I said, if you do that course that I've told you about, you will get a set of settings that will work in a balanced way. It will provide you with risk control and with the chance of earning a considerable amount of pips. The optimized settings have no risk control. They only look at optimizing pips, and that's another reason why I don't like optimized settings. Leverage. Your account must have the appropriate leverage. You know, if you're going to trade with a 30-to-1 leverage for a particular currency, a particular market phase or robot or whatever, it will restrict your earnings ability. So leverage is an issue. Trading restrictions. Unfortunately, our US compatriots that use US brokers have severe limitations on there, and they literally won't be able to capitalize on certain opportunities in the market. And then the last one is luck, and everybody says there's no luck involved in Forex trading. There is major luck involved. You have to be lucky enough to plug your robot in at the exact time that a really strong trend is happening if you're using a trending EA. That's where luck comes in. If you plug it into a sideways market, your account will battle. It might not get blown, but it will battle. So luck plays a major role, and this luck is, maybe this should be a separate point, is an inconvenient truth that a lot of people will not acknowledge. The element of luck in trading. Okay, so for more information on these 9 factors, please use this link. There's the robot, and there's the link again. As I said in the previous video, these links are actually to playlists covering the same point. So as you know, not only that video will help you, but there will be other videos in that playlist that you can go and have a look at. Oh, thank you very much, Hercules. Very pleased to know that you think so. All right, let's have a look at reassuring lie number 7. People that supply robots that don't work or lose my money are scammers, and they love that. They go onto the forums and they say, you know, I have lost, and they proudly say that I have lost 5,000 because of this scammer that forced me to buy his robot and blah, 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 blah. So they love blaming others for their misfortune and how they got scammed and how this is the worst market in the world. The brokers don't work, the suppliers don't work. It's a terrible market full of scammers. And you know, if you really going to believe that, don't be in the Forex market. There are people making lots of money in the Forex market. Don't spoil it for those people. If your mental state is such that you're looking over your shoulder and think people are out there to knife you in the back, then don't get involved. Go and play golf. Do other things. Don't get involved in the Forex market. So here's the inconvenient truth. The inconvenient truth is that if you follow a sound process of testing, optimizing, demo trading, understanding the robot, using appropriate lot sizing, and paying attention to the 9 success factors that I mentioned in the previous slide, you will not trade underperforming robots in a live account, because you'll understand what makes it tick and what its potential is, and you'll also be able to compare it with other robots. So if you're trading a portfolio approach, you will have lots of robots and you'll know how this new robot that you've purchased fits into your portfolio, and you will not use it. So the thing to do with these things is you buy the robot, you test it, you do all those things, and if it doesn't quite fit into your portfolio, you just ask for your money back. If they offer a money back guarantee, and maybe that's something you should be worrying about if you are concerned about the supplier being a scammer. And so for more information about that, here's another video. And as I said, the minute you start trading portfolios, your drawdowns decrease, your risk decreases, and a whole lot of other things decrease. Your knowledge of Forex robots increases exponentially, and you will not be caught by scammers. You will know what's going on, and you will simply test it and give it back if it doesn't work. So here's a video showing how you can trade a portfolio that will reduce your exposure to that type of thing. Okay, we're on to reassuring line number 8. Forex robots eliminate psychological problems of trading. Now, if anything, psychological problems are enhanced with Forex robot trading. The element of greed, fear, laziness, inexperience, impatience, especially impatience, lack of focus, lack of planning. Oh, you won't believe people buy their robots, just plug them into a live account. No planning, nothing, and not anticipating the worst. Now, when you're trading, you should always, whether you're trading manual or robots, you should anticipate the worst. You must anticipate low success rates, all those kind of things. And therefore, that you set yourself up to manage those unexpected events. Or you set yourself up to plan, or to have a plan. What happens if this happens? What happens if that happens? Now, just last week I made a video where an experienced trader didn't know what to do when they reached a certain level of profitability. Now, that's bad. You must plan these things ahead. So the psychological side actually becomes bigger, because you're still dealing with your greed and your fear and your laziness not to plan, and laziness not to become more experienced, laziness not to create a portfolio, all those kind of things. Those are psychological. They're not technical things. Don't think because you don't know something that it's a technical thing. The fact that you don't know it says that you've got a psychological block at learning new things, or expecting responsibility for things, because if you don't know it, you can plead ignorance, and ignorance is bliss, and all that type of thing. So psychological factors play a huge role in robot trading. Now, again, here you can go and have a look at important lessons that I've learned there. There's the link. So now we're on to reassuring big line number 9. Forex robots eliminate the need for a trading plan. Now, I've alluded to this in the previous slide, and quite honestly, you need more of a trading plan than manual trading. You need to know at what point you cash in, at what point you stop trading, at what point do you start decreasing your lot sizing, at what point do you start increasing your lot sizing. You need to understand at what place do you take your EA out of your portfolio and put another one in. You need to have that full strategy in place. It has to be a written down plan, because as I mentioned earlier, you cannot make a sane decision when you are insane, and you are technically insane when trades are happening. So you have to do those decisions before you activate the robot, before you start trading. You need to have that plan in place. So just be careful. Don't be fooled by the reassuring lie that you tell yourself. So just be careful. This is a very subtle one, but watch this one. You need to plan your strategy. You need to buy an EA. You need to test it, back test it, optimize it, that kind of thing. Then you need to live test it. Then you need to achieve good results with it. Once you achieve good results, you can add it to your portfolio live trading EAs. Once it's in the portfolio of live trading EAs, you can then think about when are you going to take it out of that portfolio, when are you going to keep it in, when are you going to increase the lots, that kind of thing. And that's how the progression goes. So it's a process that you need to follow, and that has to be a planned process, a planned strategy. So again, I've done a video, what do you do when you're making lots of money? That was recently done, this particular video, but it is also part of a playlist which you can go and have a look at using that particular link. And then for this video, our last reassuring lie, number 10, you don't need to worry about managing risk with a good trading robot. So in other words, people think they can buy a robot, and because it's been prepared by, let's say, a professional robot builder, they don't need to worry about risk, because the robot's going to be so good that they're just going to make profits, and they don't need to worry about managing risk. Now, I can tell you now, from a manual perspective and from a robot trading perspective, the minute you become more experienced at trading, the success rate becomes almost an assumed thing, and all you then focus is on risk control and not blowing your account because you're using inappropriate lot sizing, inappropriate currencies, and inappropriate robots in the wrong market phases, and so on and so on and so on. So you start managing risk, and risk management is always the most important aspect of long-term trading. Long-term trading, you can get away with it in short term, and lots of people get away with it in the long term, but it comes and bites them, and they actually don't know what's biting them when it happens. And it's best achieved by trading a balanced portfolio of EAs. Now again, I might sound like a broken robot, but a balanced portfolio of EAs says you use a trending EA in a trending market with trending currencies, and you use sideways currencies in sideways markets with sideways currencies, and you build a balanced portfolio consisting of those. And what will happen is, because of the different volatilities of those particular currencies, their losses will be smaller, but their profits will be bigger in all cases. So your portfolio becomes very risk controlled and nicely profitable. It's not the greatest profit, but it's nicely profitable because you're trading sensibly. Okay, so the EA is using conservative lot sizing and sensible risk management. Okay, so that's that. And here's again a video, a plan, and here's quite a good video. Here's a plan to make $1 million from Forex trading at low risk. Very important. A lot of these videos that you see where people have moved small amounts to big is at high risk. This is a plan to do it at low risk. And this has almost been seen by 50,000 viewers. So they like this particular plan that I presented there. So go and have a look at this plan. There's the link. And hopefully it'll give you some ideas how you also can make lots of money from Forex trading. So I've given you quite a lot to think about, and as this picture says, you need to go and and consider what I've just shown you. Thank you for your feedback on video 1 and some ideas that have been coming through on the comments on this particular video. Again, if you can add to the comments and any ideas where you have found that you have believed a lie either told to you by somebody else or a lie that you've created in your head that has held you back in Forex trade, please mention them in the commentaries of this video and the previous video. I will then move on to video 3, which you see on your screen, and we'll talk about a few inconvenient truths and some reassuring Forex trading lies. As always, the links to anything presented in this particular video will be in the description of the video, as well as in the commentary of the video. So from me, Alex Deploy, thank you very much for watching this video. I hope you've learned something from this video, and cheerio.